That's what's up. I love it. What's your name? G. Yes, that's all right. Let's get this episode of Barbershop Forex going. I'm your host, Kevin Jefferson, father of the Forex fam here in Garland, Texas. Billy's Barbershop. We're just coming in to talk about a little finance, talk about trading, and then answer some questions as it relates to finance, because some people have questions about life situations. And as a 20-year financial professional, former stockbroker, financial advisor, and current Forex trader, I have the gift and the blessing of having that knowledge of the 20 years in finance to answer other questions outside of Forex. So we're going to get to it. So I'm going to let you, take it over as you always do, Lewis. Any questions you have about training that you had or anything, that you want to focus on today?
Okay, so, going through the lesson, I see that one of the most important things for me what's hardest for me to comprehend is just label what's a pullback. To make sure that I'm identifying the same pullback, that you identify.
Yeah.
Right in there. So I was going through the lesson and I'm trying to make sure I had the right one.
So you got the Forex family goal tracking tools up, and that's the spreadsheet in the class where you analyze the pairs on different time frames so that you can understand what's happening in the market, what trend is occurring, what may be happening on different time frames, so on and so forth.
So right here, this is your first one. I found out this was one of the ones I had question on.
Okay.
And you're going to do an analysis on this chart.
Okay.
Right here. Okay. So I asked you the question this week. I know the last part of the graph is where I'm going to make my entry point.
Right.
So I asked you earlier this week, I said, why do I need to know the whole body of the time frame right in there?
Yeah.
What does that exactly tell me?
Okay. So the question is about analyzing multiple time frames. So as a part of the Forex Family online course, I talk about multiple time frame analysis. And what multiple time frame analysis is where you look at a currency pair or a chart. It could be a stock chart, Forex chart, whatever chart you're looking at, and you're looking at what direction is price moving at a certain period of time. So price is either moving up, it's moving down, or it's moving sideways. And so on the daily or the monthly chart, you can have the market trending upward, but then on maybe the 1 hour to 4 hour, the market can be trending downward, which means that it may be pulling back from that uptrend. And so when you analyze the big picture, what you're trying to see is what's happening in the grand scheme of things. And that's really important to keep in mind, because once you go down to the lower time frames and actually start taking the trades, where your execution is, think of it as like a battlefield. So the higher time frame is like you're a general, you're outside of the battlefield and you're looking at the war that's happening on the lower time frame. And so when you have an idea of what the overall objective of the general's plan is, which is the monthly and the weekly charts, then you can actually make a game plan on the lower time frames, which is the soldiers. And so having an understanding of where the market is going long term gives you opportunities to take short-term trades, but ultimately as time plays out, the long-term trend is going to generally win. And so you need to understand what the long-term trend is so that when you're making moves, whether you get knocked out of a trade or not, you understand why you got knocked out, or you understand why the trade took you in a profit. And it is, consider it like we talked about the ocean and tidal waves. The monthly and weekly charts are like the big tidal waves that are built up, and so they have that power of forcing the market forward in a certain direction. But the big time frames are made up of the small time frames. Here it is right here. So the big time frames are made up of the smaller time frames, and so you have to look and see how they all work together. And so it's really about maintaining a vision of what's happening outside of where you're locked in and focused on. Because if you get to the point to where you're too locked in on the lower time frames, you end up missing what's happening over time. Does that make sense?
Yeah. Okay. So let's say if I'm on I'm locked in. I went through the weekly, the 4 hour, the daily, and the 1 hour. Okay. So, like right here, I noticed that you go all the way back here. Okay. So.
Now, what is that? What am I analyzing, or what am I?
Okay. So you went back here to tell you what you're going to do up here.
Correct.
So
exactly.
And that is for what?
Okay, so thinking about knowing your history to know your future. You know what I mean? So when I go back, I look at previous time frames, maybe a few days or whatever, looking at the trend. What I'm trying to do is establish what was happening before I got to where I am. Because if you look at just where you are, you don't have the benefit of knowing if you're actually maybe in an uptrend or downtrend. It may look like it's trending down, or it may look like it's trending up, but you have to go back and see what the market actually had, where the market actually is.
So you confirming
correct
the trend,
right?
You're
I'm
not just taking it with your eyes. You confirming that this
is legitimately an uptrend or downtrend, right? Okay. Because the trend can change. It can change quickly. You know what I'm saying? So you got to be mindful of, in a candle or two, the trend can change. So you got to know that.
Okay, I think it's right here.
That's wrong. Why is that not right there and just?
That is so what you see here is that actually is part of that whole pullback. Mm-hmm. So what we have on the chart is the market's trending downward. It pulled back and then it started moving down again, but it didn't actually move past the previous low. So because it didn't move past the previous low, all of that movement is considered part of the pullback.
Okay.
Yeah.
So
if this is going to close lower than the previous candle down here before it started pulling back, that would be considered a new level there. Mm-hmm. But it didn't. It closed higher than where it started pulling back. So that has to all be considered part of the pullback.
So why wouldn't it be considered like a trending validation?
Okay, because as you see here, the market, you see these red candles here. Mm-hmm. So on the chart, the candles are moving down, which means the price is dropping. And then at a certain point, the candles stop going down and they start moving back up again. So that's what we call the pullback. And so what we had 1, 2, 3, 4, 5, 6, 7. Even that red candle is still, that closing price is higher than where it stopped going down. Mm-hmm. And so that's all part of the pullback, no matter what the color of the candle is. They can all be green or all red candles. It's about the price. And so all these candlesticks are closing higher than where it started pulling back. This red candle right here, even though it starts coming down, it closes higher than where it started as well. And so that's not another level down until this one red candle right here closes down there. That's where the level goes again, because the price starts dropping again.
Okay, so that was kind of confusing. I was like, why is that not considered like a trend in validation?
Right.
It dropped, and then it didn't drop as far. It didn't. I guess pull back. But it didn't pull back. And this is I guess
so that might have been a
extension.
sell trade. Yeah, you could have taken a sell because I see a head and shoulders, and so I see you have the pullback that happens after the downtrend. Then you have the head and shoulder pattern right here, shoulder, the head and shoulder, and then that red candle when that closed, it closed below the 13. So you got the pullback, the head and shoulders pattern, and then you got the close below the 13, which is what our signal for entering the trade is. Mm-hmm. Given the trend and everything. And so that's actually an opportunity for you to get into the trade and take a little bit of potential profit before the trading times out and expires. Mm-hmm. So the reason that's not a trend validation is because it would have to close above the previous pullback before the level that you're on. You know what I'm saying? So it didn't go and close above. Right. The trend of validation happened over here when this red candle closed above this highest point of the pullback. Okay. So that one didn't because it never closed higher than that one.
Okay, I got it. Okay. So and then like looking at, I know you should call your method like PVC 13.
Right.
So you like started off one of your segments like the majors and the minors, right?
Yeah.
And so what makes yours different? I'm gonna answer the question. Is you saying that most people just look at the majors.
Right.
You break yours down and go to the minors to make your movement consider the norm is basically looking at the major.
Exactly.
So that would make your technique a little different than a lot of people's technique.
I agree with that. I agree with people. The bottom line is I don't think people really respect and understand that a minor pullback is just as important as a major pullback, and it gives you information just like that. And so people who use pullbacks, they don't really think about them. In my estimation, what I've learned is most people don't see pullbacks the same way I see them. I see them as mathematically, they tell you exactly how far the market's going to pull back before it's most likely going to turn around and keep going. And so for a lot of people, they'll use what are called Fibonacci retracements. So Fibonacci retracement is basically a mathematical formula that you can plot on a chart, and it'll give you these levels of percentage of amount of pullback. So like from 0% pullback to 100% pullback. And so people use Fibonacci sequences to determine, how good, how strong the trend is or whatever. What I do is I just use the math in the pullbacks to tell me how strong, where the trend is. And so a major pullback is basically an amount that a pair will pull back before it continues long. A minor pullback is maybe a portion of a major pullback. So it may be in groups of 3. You may see 3 minor pullbacks, 4 minor pullbacks, or whatever. And normally when you see minor pullbacks, the market is going to pull back and reset to the lowest number if it's going up, and then on the opposite side, on the highest number if it's going down. So minor pullbacks are important because they're still trend levels, and they also indicate that the market is not done resetting before going long. And so when you know that, you can see things happening and even measure the major pullbacks. It'll tell you, you measure enough of them, you'll say, oh wow, this is pulling back 100 pips every time. So I know when it gets close to 100 pips, I should be looking for a trade setup. You know what I'm saying? So, but if you understand how they all work together, it just gives you a better opportunity to take a high probability trade. Yeah. So most people don't even look at it. Like even people in the class that have taken the class, they'll overlook like an exercise that you're doing when you're talking about marking up the levels and trend invalidation in level 1, level 2. A lot of people will skip over the minor levels because they don't seem very important. And that's really where a lot of times I'll call out a trade when you think it's trending downward, it's actually turned around and it's going opposite direction. I'll call it, look crazy for a couple hours, and then the trade will take off and go in the direction that we've seen. And you probably experienced that just in the time that you've been working with me, so I don't know.
So, okay, so then I'm just trying to, the questions that I have. Like when you give a trade, like you send a trade, like the, say this today. So let's say right here, you get, that's the entry point I'm getting in. Right. So if it ain't on there, like
go out to the regular chart and see what we got here.
So I think this was a.
That's
Take a trade.
So what he has on the screen is we have a private chat room where I send out trades to my students so that you can take trades with me and make money, or practice and study and plotting or whatever you want to do with them. So he has a euro yen. We had a sell trade, and how it looks is I'll have buy or sell. I have the currency pair that I'm buying or selling, and then I'll have the entry point. Yeah, there you go. Here, come on in here. And so what we'll do is I'll have the currency pair that I'm buying or selling, and then I'll have the price point or the price area where I'm selling you is the best place to get in. Now it may vary because it normally will by the time you get the message, but you'll know very about if you get in that area, you'll have a good trade. And then I'll have the stop loss, which is the amount of risk that you're taking in the trade, so how much you're risking to get your return. And then I have the take profit, which is another number, which is your target. So that way, if the trade knocks you out your target, you collect your money and keep moving. So that's what we're looking at.
I have a good weekend.
All right, bro. Have a good one, man.
All right.
Go ahead and ask your question.
So, when you knew you don't know nothing about, looking at this. So when like you said, it's taken on the hour. At first I was just doing.
Oh, and I also put what time frame I take it on, so you can actually track it with me and study my trade setup.
That means I need to go to that 1 hour screen.
Yeah.
And then I push for my new order to go in. And then like when I put all the information, my stop loss, and take profit in. When I get down here, since that price ain't over here yet, I go down here. Do I push pending order?
No, so the best thing to do is just take a market order. But what like I always say is look at the price where it is now and subtract it from the stop loss and subtract it from the take profit and see if the risk reward ratio is at least 1 to 1. If it's close, then go for it. But like normally, if the risk reward ratio, let me pause for a second. So risk reward ratio is think about if you're on a blackjack table and you got certain bets that you can take, right? So you can do a $5 bet, $100 bet, $25 bet, whatever. So your bet that you're putting up, the amount of money that you're willing to risk to get whatever you're gonna get on the other side, that's your stop loss. That's your amount of money that you're putting on the table for this particular trade. So when you set your stop loss, you're telling exactly how much risk you want to take in this trade. So let's say I want to take $50 of risk on this trade. So the stop loss is going to be set to where for the $50 of risk that you're taking, the take profit should have at least $50 of return. You know what I'm saying? So if 1 to 1 at least. And so sometimes it'll be 1 to 2 or whatever. So your $50 gets you potentially $100, whatever, and that's great. But all you need is 1 to 1 to make it make sense, okay? And so when I send you the trade, if you don't take it immediately, you want to just make sure that you're at least close to 1 to 1 risk reward. So the way to do that is subtract the entry price that you're looking at from the stop loss and come up with a number, and then do the same thing for the target, and then compare the two numbers, and they should be equal or close to, or very close to each other. Does that make sense?
Yeah.
Okay, so you put in the stop loss and the take profit there. Just go ahead and do a market order and then sell it, because it may not come back to that price. You know what I mean? So you don't want to risk not being in the trade per se. I'm not saying be afraid, but if you want to take that trade, I recommend just go ahead and take the trade.
When I click, like if it was a buy sale, if I click sale, it wouldn't actually execute until that price hit?
No, if you do a market order, it's going to execute immediately. If you do a pending order, it's going to execute at the price that you set it to be. You know what I mean? So let's say if I set it at whatever price that euro yen was at, if you put a pending order at that price, it's not going to activate until it hits that price again. Now, and there's a chance that it could, but there's a chance that it won't. So if you're okay with missing a lot of trades but trying to get a perfect entry, then that's what you're sacrificing, is an opportunity for a trade to get the perfect entry.
Okay, with this you might not have the perfect entry, but if I did it that way, then I would have to put the price exactly what I want. Exactly. And if it doesn't hit that, then it doesn't even execute.
Right, exactly.
Right. Okay.
Yeah.
Okay, that's why I'm getting confused. Because sometimes I must have been missing your interest point rather than, and I would try it and it would give me an error.
Oh, okay.
I would go
now be mindful though. Sometimes if you get an error on a trade, or like if you're trying to execute a trade, normally if you get an error, that means that you probably inverted your stop loss, your take profit.
Okay.
Because a lot of times, or you have a buy or sell trade when you may be trying to buy and you're actually selling, or vice versa, because the computer is smart enough to tell you the numbers that you're putting in don't make sense, and so it'll just kick your trade out. So it's just to protect you. So if you got the parameters right on the trade, it'll execute.
So I don't know. Do you ever talk about the buy limit, buy unit mean? Is that what the buy stop?
Okay. So what buy limits and sell limits are, which we don't do a lot of, because a lot of our stuff is live, like we're live time doing it. But if I see a trade set up and I think that it's going to pull back, like let's say if I see a trade set up and I want to buy into it, there may be a price that I believe that is going to pull back to before it goes long again or goes up. And so I might put that price as a pending order. And so let's say if I don't have any other trade, let's take the euro and the dollar, because that's what most people know about the euro and the dollar. So let's say if I wanted to buy the euro dollar pair, currency pair, and I wanted to buy it at $1.10 or whatever. So if I see the market go up to $1.15 and I think it's going to be a better execution at $1.10, I would put a buy limit order in at $1.10. Now, you put a limit order in when you don't have any other trades on that same pair. You put a stop order in if you have other trades on the same pair. Okay, and that's just kind of the way that pairs, they operate in tandem. So if you got to buy, you got to have a corresponding sell to close that trade out. So that's the only difference. A limit order is that you don't have any trades on for that pair. A stop order means you have trades on it, so you got to do a stop order to counteract what you've already done. So it's just a matter of terminology, but they're both doing the same thing.
Okay. So
that was way. So I want to make a point. Like that's way more complicated and in depth that you get when in the class. That's much simpler. That's much more of like a university level professor conversation. Getting your PhD in economics and trading. And understand the terminology, which is important. But that you don't need to necessarily understand that fully to be successful, and I want to make that clear. Like this is not super complicated. my whole premise is to make it simple to make money using Forex. You know what I mean? Because we're trying to get you free from your occupation, and so we want to do that in the simplest way possible. So I'm answering these questions because they're great questions, but they're not mandatory for you to be able to be a successful trader.
So then I had the question like, okay, I done went through your plan. I kind of feel comfortable that I want to start and just do it on my own.
So you believe?
Yeah, I'm like, okay, I can do this. You know, after I watched about him, I can do this.
That's good. That's good.
But then I was like, okay, now how do you decide which currency to trade? You know, I don't know, like, you know, I can like if these were options, there's a lot of chatter going on everywhere. Tesla, Apple. So these stuff people use, so you know, okay, I know that they're in this stuff right there.
I would say that one of the better things about the currency market is you don't need all of that chatter. I mean, the chatter brings volatility, which is called news. You know, when you get news events that happen every week, what's called high impact news, and that's where you go to Forex Factory or some other website, and you just check the news for that pair. But for me, I say just, you know, get a few pairs that you may be interested in, pairs that actually move, you know, a certain amount of pips a day, like what they call the average daily range. Some pairs will move 200 pips a day. And that means you're going to have a better chance of taking a trade on that time frame because it moves more. If you got one that only moves 15 to 20 pips a day, it's probably not going to move very much. It's going to take you a long time to make your money. So the first thing is how much action is the trade, is the currency pair getting, which you can normally check that out. Like you can just go online and find the average daily range of a, you know, currency, whatever currency pair you're looking at. But the other thing is just pick a couple and study it. You know what I'm saying? Pick, you know, I don't love euro dollar, but like maybe pick a dollar back pair, and maybe pick a Japanese yen back pair, and you know, maybe a Swiss franc, something, you know, like 3 different types, and then just track them and play with them, you know, and do it in demo, so you don't have to feel rushed to go out there and go live in the course. You know what I'm saying? You just go play with them in demo, make your mistakes, figure out, you know, because although you may be confident in the method, you may not be confident in taking a trade. You know what I mean? So technically, like you just asking me how do I place this trade? You know, I know how to do it, but I'm nervous. All of that you have to account for, which is another reason why I say that most new traders should be trading higher time frames, the hour or higher, maybe even the 4 hour, but definitely the hour or higher, because you've got more time to actually take your time, take a trade, get in there, get involved, you know, let it play out and study it, as opposed to people trying to take trades on the 30 or the 15 minute or 5 or 1, which more advanced traders can do that, I think, because you can move quicker, but most people don't, you're not ready to drive a race car. You know what I'm saying? You just basically learn, you're getting out of driver's ed, so you need to go get you a car that's safe. You need to get your Volvo. You know what I'm saying?
Right.
Then you can worry about the Ferrari later.
Yeah.
I found
Hey, brother Eric.
my problem is I went to the course, turned no homework in. I understand all the stop and all that. That's why I'm glad that I joined with Lewis, because when we quiz each other, he know all the fundamentals, and I just know how to do it.
Okay, so you got the technical piece.
Yeah, and so I really got questions to ask from the start.
Okay.
Like, my advancement has been with stock market 20 years, and they never did it at this level.
Yeah.
And that's why I was going to ask you the question on getting in and letting you do some investment for me and follow your lead.
Sure.
I was trying to get the Forex money loaded, and I having so much difficulties with it.
Okay.
And so I got to go to the bank and get a wire to them.
Oh, yeah.
And I was wondering how can I get to your program.
Okay, so if you want what's called trade copying, where you connect to one of my company's trading accounts and we trade, and then the trades happen for you at the same time, and we partner up like that. There's a link on the website, which I'll send you. So fmtrades.com is our website. There's 3 buttons that says teach me to trade, text me the trades, and trade for me.
I looked for that, I couldn't find it.
Okay, so it should be, all right, so if you're on the phone, it's a little hamburger and like the little three, that the hamburger up on the right hand side, you click that, it'll collapse and it'll get a habit down on there. If you're on the computer, it'll show up easier. But you click trade for me, and then it has the prompts to follow. You click a button, it sets up your account, and then it's easy to do. So if you have any issues, just, you know.
I want to jump on that immediately.
Okay, let's do
then
that
I'm going
today.
to start the class over.
Okay.
And make sure I send the homework in.
Okay.
Because I'm up here thinking I'm so advanced, and Lewis broke me down like he knows everything. And I'm like, I don't know the technical words for something.
Yeah.
So I said, I'm gonna just slow down.
I think that the best thing to do is what I say, don't rush to failure. You know what I'm saying? Because you can get to going fast and then you can be wrong, you know, and it's okay to be wrong. And it's okay to, right there you go. Okay. So you can be fast and you can, you know, and it's okay to take your time. Just don't, okay, if you're going to follow me, then it'll be easier.
That's what the problem was.
Okay.
When you send me those texts, I want to be able to come, click on it and be able to do the procedure.
Yeah, okay.
But since I don't have any money on the account, I can't do it.
Yeah, so we got to get that happen for you, and that's easy enough. We can go and do a screen share, and we can log in and do that. Because you may not even have to go to the bank. You can probably do it from inside your account. If you have an Oanda account, or what account did you set up?
The thing is, the one that I got with my business name, they won't take because I got my business name. Yeah. The credit union, they want me to send them a wire. I go to them and send a wire. Okay. So, but that's what company did you set it up with? I set it up with the credit union. I have both of them on there.
Well, I mean the trading account. Which one did you set up?
Forex.
Forex.com?
Yeah.
Okay. And so if you use Forex.com, you can connect to me. Well, there's a way to connect to me anyway. So if you want me to trade for you. If I'm sending you the trades, you can just do it like you've been doing it. You take the trade and you put it in. Yeah. So yeah, show me what you're talking about.
Where would you find that on here?
As far as what are we looking for?
The trade for you.
Okay. So this is not going to be in here because that's the class.
Okay.
So you got to go back out and just go to the fmtrades.com website.
Okay. I know I saw it somewhere. I don't know, like I thought I saw it.
Yeah. So let's get that figured out and see what we're working. Okay, you got FA. Okay, you got Oanda. Okay, you got Oanda.
The dude called me and told me I was in.
Yeah.
But I couldn't do anything.
Okay.
He got this Bank of America.
Okay. So you got your account set up and everything.
So when I go through all of this, it's putting in my debit card.
This is
He got a call.
I'm gonna give you my number because I think I gave my last card out here last time I was here. I've got get some more orders. So
Eric had a card. You got your card in the wallet, or you put it over
I
here?
told you to send me a copy of your card. I can have it on my phone.
Numbers 214-735-6807. Yeah, Kevin Jefferson. Yeah, I give you my website too, bro.
Get that group going up there. Work on our trades.
All right. Followmytrades.com. So you can follow mytrades.com.
I followed you up because the term got me, but I took biochemistry, so just
Yeah, it makes sense. That's what's up. Okay, fmtrades.com is my website though, so that's my name of my company, but I want you to know that, so that way you went there and they gave you a review there, you're like, oh man, this stuff don't work. Oh, good. That's it. You got it. Okay, that's what's up, man. You roll it, bro. All right, bro. Good to see you. All right, bro.
Okay.
All right, you too, man. Be safe.
Like right here when I go to bank.
Oh, exactly.
Oh yeah, that happened to me. That happened to me last time. Okay.
And it says
Unconfirmed.
confirmed, but the dude called me and told me it was confirmed, but it's not going through.
Okay, click to upgrade to a verified account.
That's what he goes. You talking about like Robinhood or
you got to put your credit union there or wherever. You might find it on there for you.
for this one? I'm using Orlando.
They didn't do it on credit union, they did it on Bank of America.
But
that makes sense because a lot of
so
times
what
credit
you do
unions are like
is,
a little bit more so.
I know Ameritrade has it itself.
I couldn't understand why
But Orlando has it too, and then you download.
And now you may have been approved,
this
but then
thing
you have
called
MT4. So you gotta
work on.
Right, I'm gonna have my guy Justin.
But the broker is Orlando. Is it Orlando? I said.
When I did this with the Bank of America, I hit that and went and
straight
my
through.
bank called and said, "Did you do that?" I
Yeah.
said, "Yeah." But then I hit the 500 and then started acting like it's gonna work, and they said, "Name does not match your account."
Okay, so they said the company name.
barbershop.
Oh, okay, yeah. So they're real big about fraud prevention, so that's why they're big on that. But
And the next thing I think I might just go and tell Bank of America send me another debit card.
I think that's a good idea.
Just do it that way.
That's smarter. I think that's a smart way to do it.
I've been busting my head on that.
Yeah.
I'm just gonna get
Yeah.
a debit card because they didn't prove it.
Keep it sweet and simple, yeah. Just put the debit card information in there and then you can fund it, and it's immediate.
Credit union won't let me do the automatic. So
Yeah, that's one of the differences. Yeah, exactly. That's exactly right. Credit union is still different.
So that's why I tell Louis, I'm ready to start
Making
something
move.
going. It's
Yeah.
like, let you run it,
Yeah.
and I learned.
I mean, okay.
Because see,
Let's link back up on that because let's circle up on that between the night and no later than the end of tomorrow. Let's get that done. Like,
because the great thing about it, Louis kept learning. So it's like, man, I thought I knew a lot. But you don't know, just that
you don't know.
you don't know.
That's right.
Like I could do everything you're saying do, and I don't know why you do.
Yeah, exactly.
He's making me catch on to why you do it.
Yeah, that's good. The why is the most important part, you know what I'm saying? Because the why goes to the process, you know what I'm saying? Because a lot of people, like we were talking about, Lewis was saying, you know, I'm taking trades and they're profitable. And then he said, but I don't really like that because I don't understand why I made money. You know what I'm saying? And that's really more dangerous than taking a trade and losing because you think that you know that what you may not know. You know, so it's just a matter of time.
Yesterday, by him saying, how do you pick what funds to buy?
Yeah.
I was thinking to myself, well, we got a leader now.
There you go.
It is good to know
Yeah.
why
How to
they're
switch
looking
and
at
stuff.
something.
Yeah. So what I do for me, I'm looking across a lot of different pairs, but I really lock in on about maybe 4 to 6 max that I trade. And so for me, I try to stay in those because just like I always talk about, you know, learning the currency pairs is like learning your partner. You know what I mean? The fewer you deal with, the better you can learn them. You know, and the more you can learn their tendencies and how they operate. And so what that does is it gives you understandings of when they move or they do certain things. You're like, okay, I've seen this before. I know what generally happens when this occurs. I can get myself set up. When you're trading across different pairs, they do a lot of similar things, but they don't do it the same way. You know, and so what I do is I say lock in on just like 2 or 3 pairs and study them. Euro, high liquid, like highly movable pairs like Euro USD. Pound dollar, pound yen is a good one, you know, because it moves a lot. And then maybe an Aussie pair, like Aussie dollar or something like that, just so you can see how they fool around and just lock in on them. And so what I do is when I'm sending trades out, is I scan the different time frames that they're in. So I'll look at it and I'll say, okay, it looks like it's pulling back on the 4-hour or the daily. I see it's, you know, it's getting ready to make a move. Let me go down to the 15-minute or 1 hour and see if there's a trade opportunity setting up. And so I'm always analyzing the market every time I come to it because I want to see where it is in the confluence of what I think I see. You know what I'm saying? So even though I may have done an analysis, that helps me lock in quicker. You know, so if I've already done the analysis saying that, okay, everything is trending upward, I'm just waiting on a pullback so I can take a better trade. That just makes it easier for me to go look for a buy trade. But I always go to the market and look and say, okay, has anything changed since I came last? Where was it when I looked at it before? You know, all that stuff. So that way, it's just like checking your mirrors when you get in the car. You know what I'm saying? You just want to make sure that your stuff is in order. You trust it, but you just want to make sure it's tight. You know, so just when you do that with fewer pairs, the more success you'll have because you can learn them. And then when you get into a rhythm with the pairs, you actually start to flow with them, and you can take the trades, you can get off of them, you can get back into them, you can get out of them. And that's why y'all see me sending a lot of the same pairs all the time, because once you kind of started learning the flow, it's hard to jump on something else and start trading it because you're kind of out of sync with it. And that's normally where you make your losing trades. So for what I learned this month is this last week, gold has been, even though I've been calling for good gold trades, because of the way that I approach it, after a certain amount of time, I close the trades out because I call it time-based expiration. So after 12 to 16 candles, I get out of the trade, win or lose. And so that means that in the gold trades, they ultimately played out. As you see, they went short. When I'm saying go short, they're going long. When I said they're going long, Bitcoin dropped like I said it was going to drop. Like I talked about that for like 2 weeks, you know, telling people Bitcoin's getting ready to drop. And, you know, and it finally dropped and hit our target yesterday. 30% win, you know, for people who took that trade. And so I stay in the loop. I stay in the loop and I try to stay on a certain pair because as you flow with it, it becomes easier to see what's happening. You know what I'm saying? It's just like anything else. Once you get in the rhythm, when you running and once you get up in your running mode, your heart rate's right. You know what I'm saying? All right, brother, take care. Everything's good. So that's the same with trades. Just get a couple pair, learn their heartbeat, and then it'll be easier to see setups. And the only reason you expand, this last point, the only reason you move beyond the pairs that you're in is, first of all, you've gotten comfortable enough to take them like regular, but then you may be looking for more opportunities. You may add a couple pair to get, you know, when yours are moving, you got a couple that you can get into that are moving, you know what I'm saying? But you don't want a lot at once, you want a few.
I never had the opportunity to really learn the stock and sell thing.
Yeah.
And I was looking at how you do that. You set up where you're gonna make money before you lose money.
Mm-hmm.
And that's why I need to get comfortable using that. Because I never really got to use it. I just when it made money, I sold it. When it didn't really like that, I tried to hold on to it, go back up.
Mm-hmm.
And that's just like on the Robinhood trade. This is a whole new format for me.
Mm-hmm.
But I'm just saying that the losses are less when you follow your receipt.
For sure.
The odds are you got the odds in the favor of winning.
That's right. That's right.
That's why I said, shoot, this is gonna be easy, but can't get in to taste it.
Yeah. But we gonna get that handled. Cause that's too easy a problem to fix. You know what I mean?
I'm just telling Lewis, hey man, you got a stop loss in a sale package. You can just go on back to your business.
Right. You can live your life.
You look at it, hey, I made money.
Yeah, exactly.
At 6 o'clock at night.
It hit right. It hit when you ain't paying attention.
That's
You
the
know?
comfort zone I'm looking.
Yeah, so the pound dollar trade sale that we had on a day or so ago hit, you know, it is, and I love, and that's the thing, you just look up and you're like, oh, you know, it paid out, you know, and so the part of what you're saying, Eric, is what a lot of people have challenges with is how to manage, first of all, how to manage their risk, you know what I'm saying, to make sure that you're not risking too much to blow your account out, and then secondly, how to manage your trade, and so that's what I talk about in the class is how to manage your trades because there's ways you need to make everything, even if you're manually doing it, you need to make everything as automatic as possible. You know what I'm saying? That's what increases your chances of success. And so when I talk about when you get into a trade and you have an 8 to 12 bars, and actually now it's expanded to 16 bars, so 16 bars, 16 candles. After that, you get out of it no matter what. Unless you analyze and you see that it's truly going to go where you think it's going and you want to take that risk, that's fine. But you need always have hard, fast rules about how you're doing it. So you always need to set a stop. Always need to have a take profit. And people who don't do that, they're more stressed out as traders, you know what I'm saying? Because you're always worried about it, you're always looking at it, and that's counter to what we're trying to do. We're trying to simplify trading so that we can use it to take out blocks of money so we can go buy other income producing assets. You know what I'm saying? We're not just trading to trade.
Right where I'm at.
Yeah, we using it. We're using it to cash out. We ain't using it to, just to be trading. So you got to do it. You got to set yourself in the discipline of doing it the exact same way every time. So that way, that's the only way that the edge that I've created plays out. If you keep tinkering with it every time, like if you choose not to set a stop one day, or you choose not to honor your money man, like your risk plan, you say I only want to risk no more than 2% of trading, but then you see a trade set up and you risk 10% and it blows you out and it offsets all the work that you did for the whole month. You just wasted a month, you know what I'm saying? I mean, you earned a lesson, but you wasted a month of profits. And so the more you just treat it like going to make the donuts, you know what I'm saying? Like I get up, I freaking put the donuts in the oven, I sell them and I do it all over again. That's all you want to do. Like you want to make this the most boring part of your day as possible. That's when I know you got successful at it. So anyway.
That's why I get you guys in touch with me as soon as possible.
Okay, let's do that today.
I got money with Vanguard, I got money with Fidelity, but I don't get to see what I'm
Yeah, exactly.
You saying I can actually sit there and watch.
You can see the
and
trend.
learn.
Yeah.
That's why I'm so eager for that before I even,
Dive
that's why I don't
into
mind starting all over and taking my time, but I just need to be seeing something.
Yeah.
Because if you don't invest in yourself, you're just wasting time.
I agree with you.
And if I'm sitting up here, I invested in the Clarence, but my life is still in ruckus. I got so much going on. So I'm ready to invest in you and let you show me what's going to be going on over here.
Right.
And then I can catch up over here.
There you go.
And that can be something that I can just ignore now and just
and they take care of itself.
Tell my daughter, that's yours.
There you go. So let me tell you what's funny about that. So I think one of the other benefits of us working that way is you see an activity, even if it's just a daily trade confirmation to come through to your email, you see that something's working. You know what I'm saying? So now it's a real thing to you, as opposed to it being a concept. You're like, oh yeah, that's cool. I think, it's a thing going, like you say, Fidelity, Vanguard. You get a statement every month, every quarter, whatever. You don't even know how they're doing it.
Yeah.
But once you see it happening, you get excited. You're like, okay, now I really want to lock in and learn how this is working. And so you become more educated, which makes you more invested. You know what I mean? And so that it works both hand in hand. And I think that's a good idea. Having that activity happening, even as you're learning, it helps you learn better because you become more motivated to stay with it.
I work on my feet, so when I get home and eat,
Yeah, you
I
down.
put the headphones on and I get to looking at that screen.
Yeah, that thing hypnotizes you.
And each segment about 5 or 6 minutes, and I'm like, I watched it, but I've been learning.
Yeah, I understand.
And then I go to the next one because you know, I launched one screen twice. And I said, you gotta have it by now.
So you done went and did the social promotion. I might not have retained, but I'm gonna go and promote myself
When
anyway.
Louis started showing me some stuff and I can't answer, he asked me what EMA is and all that. I'm like, oh man, I don't even know.
That's good though. It's good to have that accountability partner, man. You know what I'm saying? That's a big thing. That's a big thing.
Well, I was thinking like, you know, being that if we both learn, then we could come up like here and set up trades,
Absolutely.
you know,
Help other
together.
people.
And what I see, you know,
bounce
he
stuff
might,
off.
bounce stuff off each other. He might
What you
see,
doing for us, we can do for somebody else.
yeah,
Absolutely.
and then right
Absolutely.
there,
And
set
help
it
each
up.
other. Yeah.
Yeah, you grow better when
Yeah.
somebody else might have eyes.
That's right.
And Eric's
Iron
good
sharpening
at
iron.
mathematics.
You don't want to squeeze in for these last minutes though?
Okay. Good.
So,
Good.
but that's why I'm going. I'm like, man, you got to get this where we can look at it together.
Yeah.
You might catch this a little bit faster than me
Yeah.
right here and show me
Yeah.
something that I'm missing.
Exactly. Just different
I
perspective.
know what I'm doing, but I don't know what I'm doing.
Yeah,
Because
yeah,
I
yeah.
done went through the procedures, but I don't know the procedures.
Yeah. You know the technical. You don't know the fundamental
Yeah.
aspect.
It's
Yeah.
like being an electrician and working under somebody. You can do the work, but you don't got the license.
That's right. Yeah. You don't have that understanding.
Yeah,
that
the
real
understanding, you just
understanding.
robot. You
Yeah,
match your
exactly. They
colors.
tell me to put green with green, red with yeah, so I
you
do
don't
that.
know
You know
why this is doing this or why that. I want to know why.
There you
That's
go.
what I'm
That's
talking
where the
about.
power is. That's where the real power is. So I was gonna say, you don't have to get on screen, but if you want, you can write down your questions, and then Lewis can grab them. That way, I can answer them without you having to be out,
She
all
sound
the
like she
videos.
advanced more than both of
But
you.
she glad she got some knowledge. I mean, I'm looking at you nodding like the way you respond. I feel like you know a little bit more than you let know. So okay.
But she asked a question. So when
I
you
was wondering about the platform. What you was saying, like E-Trade, Vanguard. Does it matter what platform you use?
Okay, so the only thing that is important is that you have a company that has a Forex trading platform. Okay, so because every company that has a Forex trading platform has normally their own proprietary company platform, like Ameritrade has their own Thinkorswim platform, but then they also normally have an MT4, MetaTrader 4, which is the universal platform for everybody in the world. And so the only thing you got to make sure that whoever you go with, that they offer Forex platforms, because it's not the same as a stock platform. Okay, yeah. So I've got on my website, there's a company that I like from a customer service standpoint, and they're US based, which is important from a regulation standpoint. You go there and click the link and you can set up an account with them. It doesn't cost you anything and you can fund it whenever you want to. So
Now, do they take commission?
now, so what they do is they take their commissions when you trade. So the commissions are built into the trades that you take. So yeah, you don't have to worry about paying them anything on a monthly basis or anything like that. So yeah, it's only on your activity. So if you don't do nothing, it's crickets chirping. They just sitting there. They just sitting there looking at you like, what you gonna do?
I'm glad you asked that question. Would you recommend going through TD Ameritrade or
Orlando or whatever.
Robinhood? Because they do offer.
Yeah, so I would say I don't. Well,
But I always want to stick with the plan.
yeah, I would say that what I would do if I was asking this question, I would want somebody to tell me this. I would use Oanda, which is the company that's on my site, because I have a
That's what I
relationship.
got here.
Yeah, that's you. And so for two reasons. First of all, they're regulated. They got a track record that trustworthy, because getting access to your funds is a big deal. You know what I'm saying? So you got to be able to know that they're going to reliably be able to get your not the ability to deposit, but the ability to withdraw.
Yeah.
And so I've never had any challenge with them. They've been around through a lot of market cycles where things have gone wrong and companies are going out of business. That's those things I paid attention to. And we also have a relationship with a company called Forex Park FX. And what we do with them is we send people to Oanda, but we send it by way of them. And so they become not only your customer service, so if you have questions, they can answer them for you and help you get your account set up, and like the issue you're having with the funding, he can help you with that. But also, by using the relationship that we have with Forest Park, you get rebates for your trading. So even if I'm trading for you, or if you're taking trades yourself in your own account, Forest Park will send you a check on part of their commissions for your trading. So you talk about commissions, you create commissions just by the trades that you're taking. They take a portion of those commissions and actually send them back to you in the form of a check, because they want you to make money in every way you can. So even as you're trading, you get. Matter of fact, one of my students, and I trade for him as well, but he's a student. He sent me a copy of a check that he got in the mail the other day. He said, man, I got my first check, you know what I'm saying?
Wow.
And it's cool, you getting paid just to trade, you know? So I recommend, if I was asking that question, I would say I would want somebody to tell me a company that's trustworthy, a company that I'm getting paid even when I'm trading, no matter if I'm making money in my trades or not, I'm still getting paid on the volume. And I've got a customer service relationship to where if I have questions, I can actually I can email or talk to somebody directly and not have to worry about it being somebody overseas. So for me, and I've got European clients that I give them different answers because they've got a different access level of different
They
things.
get around.
Yeah.
I ain't never got no money from TV Ameritrade, Robinhood, Vanguard, Fidelity.
Right.
They doing all this commission and I don't get nothing.
You don't get nothing, exactly. So yeah, if you want to, I just believe in having relationships where everybody winning together, and so that's why I would recommend stick with the game plan because it'll help you out in the long run. Yeah.
What would you say estimate for a beginner as a minimum or average to have an account to begin with?
Okay, so that's a great question, and it's a very personal question because every situation is different. Yeah, but I think that from a safety and practicality standpoint, I think that I always tell people the ideal situation is to start off a trading account with $2,500. That's what I tell people is the main. That should be your goal. Even if you don't have it all up front, start with at least $500 in your account and make a payment plan for yourself, like $250 or $200 a month, whatever that number comes out to be, to make sure that in that first 12 months that you funded $2,500 in that account. Now the reason is it gives you padding and gives you room to take multiple trades, because the more trades you take, your trading account is like a credit card. So if you've got a $1,000 balance, they're gonna hold a certain portion of that balance for every trade that you take. So if you take 5 trades, let's say if you only got a $200 balance and there's a minimum lot size that you can take, having a low balance actually may flip the risk on your account, if that makes sense. You know what I'm saying? So because there's a minimum, let's say if you're at a blackjack table, I always try to bring it back to something people can understand. If you're at the blackjack, I'm not saying that you gamble, but I'm saying most people have seen blackjack table. So if you're at a blackjack table and you come to the table, even though the upper limit is $2,000, if you come to the table with that one $5 chip, your chances of winning are much smaller because you don't have the arsenal to sustain. And so when you have a larger account, first of all, you can take more losses, you can take more trades, and you give yourself the benefit of math working in your favor, because the edge that I teach, the more trades you take, it plays out over time, you know what I'm saying? And so with a small account, you can do it, but you may miss out on trades, you may not be able to take full advantage. So I say the absolute minimum you want to start with, bottom line is I say is $1,000. That's your absolute minimum you want to start with. If you're going to do a payment plan for yourself, start with $500 and build it up real quick. So inside of 90 days, you should have close to $1,000 in it, and you can get started. Okay. Great question, by the way. Thank you.
This program has a margin account on it, and what's the benefits of a margin?
Okay, so a margin account, that's the way that we make Forex make sense for us, okay? So what a margin account is, you can do that in stocks. Stocks have margin accounts. They're a little different because you normally have to own the security to take margin against it because you can borrow up to, I think, half of it or whatever. So in Forex, you automatically get a margin account because the premise of Forex is the dollar, no matter how much it moves in a day, no matter how much we talk about, the currency market going crazy and all that, you're not going to see the dollar do what the Bitcoin did the other day, right? You're not going to see the dollar drop from 50,000 to 30,000, you know what I'm saying, and have a $20,000 drop in a matter of minutes. So because of that, and the reason is because if it did it, the whole world would stop, you know what I'm saying? Because if I knew that there was a chance that the dollar was going to be worth 50 cents at the end of the day, you thought they was taking bread and milk at the store with COVID and all this other stuff here. Think about what people doing, you know what I'm saying? It'd be a madhouse, you know what I'm saying? People wouldn't go nowhere, people buy up all the stuff, it'd be a major issue. So you're trading pennies on pennies on pennies on the dollar. And so because you're trading pennies on pennies on pennies on the dollar, it's like, yeah, you go play the penny slot machine, but we're gonna treat that penny slot machine as if you're actually playing with $10 or $1. You know what I'm saying? And that's what margin and leverage do for you. Margin is really the percentage that each trade costs of your account. That's your credit limit. But the leverage is what allows you to make real money on pennies. Okay, and so that's why actually leverage is the big thing. Margin is just your borrowing power, and that's just based on the size of your account. But the biggest thing is how much leverage do you have to take trades. You don't need a lot, you just need more, you need more than what you get in the stock market to make it make sense. So, yeah, so that's a great question. So margin is basically the size of what you can borrow to trade.
I was always worried about that sometimes.
Yeah, well,
I
because
get myself in a
you
situation
should
where I had to
ultimately
get
not.
that win and then get everything back to normal.
Yeah, so when you have a margin account, what you're looking at is the percentage of your margin that you're using on trades. That's how much you have left with, like, whatever the difference is, that's what you have left to take another trade. So your margin balance also gives you a clue as to if you're trading too much or if you're taking too much risk. How you doing, brother? If you're taking too much risk on a trade, because if you're taking 3 trades and your margin starts like turning pink or like giving you a margin warning, that means your trades are too big. And so generally, if you're trading on margin, it's like a credit card. Like you say, you want to keep your percentage of used credit to a certain limit. You know what I'm saying? So you maybe want to like use no more than 30% of your account. You don't want to use 50 or 100% because then your trades don't have room to breathe. And then you'll get knocked out and they'll close them out for you and end up losing money. So anyway, all of that, great questions though. All of that stuff is important.
I heard none of this stuff before. I'm really confused.
Now, yeah, that's good stuff though. No, but that's good. That's good.
Then I
That's
want to
good
ask you,
information.
what do you think about stock options and swipes?
Stock options and swipes. Now swipes, you have to maybe enlighten me on what that is, but I'll talk about stocks and options.
Am I saying the right word, Lewis?
All right.
You got it from the other program. It's like get it, buy it, and sell it immediately.
Oh, you talking scalping?
Scalping.
Scalping.
Okay, scalping. Okay.
Do you
Okay.
think that's something that I should plan with, or just focus on playing?
I would say that scalping is just a methodology of trading, and it's not necessarily good or bad. It's just a matter of how proficient you are at it. So, like I say, you can go out and you got the money. You can go buy a Ferrari. You can go buy, you can go buy a race car. But if you don't have the skill to drive, you're gonna wreck it. You know what I'm saying? And so scalping, in my opinion, in most cases, is where a lot of people find trouble because they don't have a method to use to scalp properly. So you get in and out, and now you're basing your decisions on your intuition and not on math, right? And so the whole purpose of my class is to teach you how to use mathematics, how to use the data that they're giving you to make decisions. Even if it works against you, you're using their data so that gives you a better chance of being successful. When you're scalping, a lot of times people say, well, I want to get 10 pips, and get out of here, or 5 pips and get out of here, or 3 pips. And that's cool, but what if the market goes against you 5 or 6 or 7 pips, before it comes down? And a lot of people, when you're scalping, they don't set stop losses on their trades because they want to give it room to move. And so if it moves against you 7 pips, now you got to sit there, what was supposed to be a 3-hour tour, and turn into Gilligan's Island. You know what I'm saying? So now all of a sudden, I came here because somebody told me that scalping happens in like 15 minutes or less. I should be done with my trading day. I'm sitting here 3 hours late waiting on this trade to work out in my favor. That's the problem with scalping, because if you don't understand how to manage it properly and do it quickly, you can hurt yourself. So you talked about stocks and options, which that's an asset class more than a methodology. But stocks and options are fine. All of this stuff, you can make money using my method trading stocks. You can use my money trading options. Actually, if you can chart it. So it's not about the asset class. It's about the approach.
That's why I said you just answered my question. Would you recommend it? I say not for me. I think I just need to get the program moving forward.
I think
because
you
got a good program. So
I appreciate that. Thank you.
I just hate that I'm just like, I cheat always too high.
You ready? Yeah, you're right. You the one. You're like, hey, I'm gonna pay bottom line up front, baby. Let's get it there. Yeah.
I'm out of class from already, and I said, let me stop cheating and do the procedure.
Yeah. Well, there's a mindset for people like you. So there's a test that I learned about, and it talks about your core qualities, and like no matter what, like the Myers-Briggs test, it changes over time. You know what I'm saying? Like the ENTJ, INTJ, all that, like whatever that is, you can change over time. But this test, and I have to find it. It really talks about the core of who you are. So when you find out, like yourself, you're a person that ultimately is, hey, I'm an executor. So I'm about getting it done. I don't really get bogged down into the details. I'm like a CEO. You know what I'm saying? I'm like, hey, I'm about execution. And so
put the table together.
yeah, we're gonna figure it out, right?
And have 3 screws left over.
Excuse me, yeah. And you're okay with that.
Yeah.
And so that's a great. It can be a great quality. If it's used in tandem with something else. So first you got to understand that you are that kind of person, and then you got to say, okay, because of what I got this is my deficiency, so I need to find somebody to help either fill in the blanks, like Lewis could be the detail guy. He can help you fill in the blanks without you, because you get frustrated. I can sense that you probably get frustrated, like, I don't want to get bogged down into these details. I want to get to the bottom line, and that's cool. So you'll need an accountability partner that fills in the gaps with the details. Y'all both can't be let's go, because then y'all ain't gonna get nowhere together.
And
You
he
know what I'm saying?
said, I'm gonna get rich before you now. I'm watching all the way.
All right, I ain't gonna let you leave me. That's right, I ain't gonna let you leave me. But you know what? With that mindset, y'all will win together. And so it's okay to have that. You just got to know it, and so you can deal with it. You know, and I tell you, I've been trading for 13 years. It took me 3 years of on and off losing major amounts of money. Like I earned my education. I paid $5,000 to go to Florida to sit with some guys for a week to learn how to trade. But my education was really, it was like Ivy League money. You know what I'm saying? Like it really was. It was a multiple $10,000 education, maybe even 100. You know what I'm saying? So it wasn't cheap. But that was all the lessons I earned over time trying to figure it out and get it done quick. I realized that if I slowed down and just like really just mastered it like I did in the last year when I really started kicking the tires and going great with it, if I slowed down, I would have went further faster. You know what I'm saying? I'm blessed that it's worked out for me very well, but I'm just saying I spent maybe 2 out of 3 years that I could have been making money when I was trying to rush the process. And I always tell people in the class, if you rush the process, that means to me that you don't trust the process. You know what I'm saying? Because the only reason you fast tracking the process is because you think that you can get it done a different way. You know what I'm saying? And so if you just take the steps, learn it, take your time, and then like you say, let me trade for you on that account. You know, do the trade copying, so that way you're still making money. So you ain't pressed.
So that's what the problem.
Yeah, you pressed to make that money. Yeah, you're like, I'm missing out. Absolutely, I'm missing out. And so, and that's real human nature. So what you do, you make it happen.
Somebody wanted to invest, somebody to invest.
Yeah, you ready to move. Yeah, you're a doer. You know, and so you just gotta have the right parts in place. And you got the trusted people in place. You can do that, and you got that. So now you can learn it while I earn for you.
And that's what I said, Lord, I'm trusting enough now. I just looked and
Check that out.
Hey, he done made me feel better than 20 years of being with Vanguard.
I feel you. I appreciate that, brother. God bless you, man. So yeah, that's that, man. I mean, that's a lot right there. So I mean, any other things y'all want to wrap up with, or any comments or thoughts?
I just want to ask about this trade.
Okay, all right, show it to me.
So
bring it on.
So that's a level 1 long right there, pullback.
Correct.
Okay, so
what he's got there is that L1 LPB is what it's showing. That's shorthand for level 1 long pullback. When you take the course, you'll know what that means. Go ahead.
Okay, so let's just say it went up long, right there. That's right there. It ain't considered a pullback until it dropped a little.
There
right
you go.
There. So it could be a level 1 long pullback at the bottom. What is it? Just a level 1 long at the top. Okay.
And then the level 1 long pullback is how far back it moves from the top.
Okay, so then if it's going in the let's just say it's good. So the trend is going in the up position. So since it's pulling back, I got my line right here. So when it touched that line, that's when I have my entry point to go up. Right.
You ideally speaking, everything lines up.
I had my factual right there.
There you go.
It was I guess it was.
When you pull back your pattern and your close.
Yeah.
You see
I
that.
got a pattern. I got a close. I see the 13.
Right, it's above the
13. And I say, okay. Now I can entry right here. So if it get to right here. So that's when I go in and I can set my parameters. Inside, that's when I click on new order.
Yeah.
So then if I press market execution, is it going to buy it right then, or do I? Okay, so how do I get it to buy? I wanted to go wait till it get to that point.
That's called a limit order. So
okay, so
so what you can do with a limit order, let's say if you have a strong conviction that a pair is going to move to a certain price point, you can put in a limit order. You can put in the price of what you wanted to execute. Go ahead and put your stop loss and your take profit in there, and you can leave it alone. You can even set a timer on it to cancel. So let's say, hey, if in the next 4 hours this trade doesn't activate, delete the trade. So that way that protects you in case you get into a trade that's actually going in the wrong direction. You know what I mean? So yeah, you can set a pending order, which is called a limit order or pending order, and then walk away and let it execute on its own. But that goes back to what we were talking about. If you have a strong conviction to do that, that's wonderful. Just be prepared to miss out on some trades because it's not guaranteed to go to where you think it's going to go. But that is a way to get good, really solid entries and maximize your risk-reward ratio. But so it may work out for the better. You know, it's one of those things you can try out. Hey, do some pending orders on your demo account. See how many orders in the course of a week or a month actually activate, and then use that to decide, okay, I want to use pending orders as a strategy. Because what could happen is the ones that don't activate might be the ones that saved you money. You know what I'm saying? Or the ones that did activate may have lost you money. So you get, that's a way to measure the method. You can take my method and actually customize it to whatever works for you in your life. So that's a great way to make your own.
Okay.
So wouldn't you want to, like level 1, wouldn't you want to put a stop loss and gains or sell at the higher point?
So if a level 1 long, and then you're talking about try to catch the pullback.
Yes.
So you can trade counter trend, and that is completely okay as long as you are sure that you're actually at a point where it's going to pull back.
As long as the pullback, that's what you want.
Right.
Make
So
sure it's going to go pull. How do you know it's going to go pull?
well, because price changes. So let's say if price goes from A1, A2, A3, and then it comes
my
back.
God.
So brother, then it goes back down to A2.5. Prices drop, it closed lower than A3. So now it's at A2.5. That's a pullback. Now it can go from A2.5, A2.55, 8.251, whatever, and then once it starts going back up beyond A3, once it goes A3.1 or more, it started trending up again. So everything after A3 that was less than A3, that's the pullback. Once it goes back above A3, that's when it starts trending up again. So what you're talking about is trying to catch the pullback and trade it off, which is it's the riskiest trade because you never know if it's at a top or a bottom. But it's also one where you can get you can maximize it well. So what I tell people is, as a beginning trader, don't try to trade the pullbacks. Try to trade the major trend, like the 4-hour trend, the daily or higher, and then take a trade on the 1 hour or 30 minute or whatever to maximize that. Because you need to get, it's more important in my opinion for you to get confidence than it is to get profitable.
If it's got a pattern that is going down, the drop back is more important than going up.
Oh, say that one more time.
And you put, like if it's going down and it starts leveling back up to level 1, then it goes back. So is that a good time to mess with it?
So the best way to know is by just watching
You're
it.
supposed to know the trend.
Yeah, knowing the trends, or analyzing the markets, and then letting the patterns and the close above the 13 if you're buying, or below the 13 if you're selling, let that tell you.
So you can actually go in the Forex format and like go back on history.
Yeah, and see where it is.
3 months back.
Yeah.
And look at it at that point.
Yeah, but you don't even have to go that far. You go back enough to understand what direction it's moving. And then as you go through the course, it'll make more sense. You'll start to see where it's pulling back. You'll see where it's stalling out. And you'll see where it gives you a trade opportunity after that.
And seasonal too.
Oh, yeah, I think seasonal. I think
Because you know when you just
people talk about
Robinhood and stuff, some stuff is basic seasonal. It's gonna go up, it's
Yeah.
gonna go down.
yeah, because you got different things.
But you ain't making no money.
There's some things that are seasonal because there's some commodities that are tied to currency pairs, like oil and the Canadian dollar. They generally move together because Canada is a big oil exporter, so oil prices affect their currency. The U.S. dollar is considered a safe haven currency, so when the markets are scared, a lot of times you see people going into gold and going into the U.S. dollar. When if you're Australian, strangely it's tied to gold and the real estate, so more to real estate. So you see real estate prices changing, you'll see the Aussie change. But that, you can make money, that's another thing about Forex. Forex is going to give you opportunity, generally, in most cases, to make money every week. You know what I'm saying? And it don't matter what's going on in the market. It's going to give you a chance. Like this Bitcoin play is a perfect example. I've been literally been talking about this trade for 2 weeks. If you go to my YouTube channel, you go back, I don't know if you looked at it.
Yeah, I saw
Like,
that. I told him, I said, man, he said that Bitcoin will go to 34. Right there, and it was at 40 something then. Right there. And then that joker got there at 30 something. I said, he might be right on that.
And he hit that thing and bounced off of it.
Don't leave that question. I see you raise
So
your
you got a
hand.
question? Yes, ma'am.
I answered it.
Okay.
I answered it.
You want to benefit the class and tell me?
Now I was, I don't know, it was silly. I was wondering, like cryptocurrency, is that considered into Forex? But it's considered stock market.
Oh, okay, great question. So crypto is just another type of currency. So you can trade crypto in the Forex market. Yeah, we can trade big. I mean, certain brokers allow it, and so you can trade that just like you trade anything else. But so Forex is called fiat currency. That because that's what the government's issue. Crypto is just a deregulated, untethered currency, which means that it's not tied to any particular government. But you can trade it just like a stock and everything else. So it's just about what we call asset classes, so that you can give it a category. But it's all the same type of stuff.
Some more questions. Okay, now like if I'm trading one currency, like you said, this is a pair. I put one trade in there at this time. Can I go to another time frame and put another trade in?
Absolutely. I had two on yesterday with the pound dollar. Yeah, I had two. Y'all didn't get the first one because it was on the. I think I took it on the 15-minute. I was testing it out. So that one was on play, and then I had one. I had one on the 5-minute, which I didn't send out to you guys. And then it came back and gave me a trade on the 15-minute, and I sent the 15-minute trade out to you guys, which actually played out. So my 5-minute trade actually. It reached what I call the time-based expiration point before it went down. So now in my mind, I had a decision to make because I had two trades on. I'm like, okay, this one on the 30-minute is still legit, but let's think about what all the possible outcomes are. So I took it on the 5 and I took it on the 15-minute. So I was basically doubling up on that pair. Once my expiration hit, I had to make a decision of, do I want to trust that this may play out in my favor, or do I want to cut my losses because it was at a small negative? And so now I can guarantee how much I lose in this right now, because I don't know if it's going to actually go to my take profit or if it's going to stop me out. We still didn't know, right? I was believing that it was going to go. So I closed out the one that was on the 5-minute and I took a small loss on it. And then I let the one on the 30-minute play out because it still was within its time expiration. When the 30-minute trade played out, it hit the take profit and it canceled out the loss, the small losses I took on the 5-minute. Now, let's go back to that same decision. I could have let it play out, and what I would have done is, let's say if I lost $15 on that trade, but the trade was set to lose $75. And so I had two trades on that were basically set, let's just say $75 a piece. So with these two trades on, I was set to risk $150 to get about $300 or $400, right? And so when I left that, if I would have left both of them on, I put myself at risk of losing a whole $150 because I didn't know it was going to happen. What I did was I cut my losses to now. The worst I was going to lose is $90 in exchange for making $200. You know what I'm saying? So I still kept my risk at 1 to 2, less than $100 for $200 in possible returns. So when you get the reason for having time-based expirations and decision points is it allows you to make clearer decisions in a much more mechanical way than just going off of intuition. So I know I kind of gave you a long answer to your question, but yes, you can take multiple trades on multiple time frames, and that's actually ideal. It's ideal if you can maybe get 2 or 3 trades on one pair on different time frames. You're stacking on that trade, and then you can just be done with it.
Can you do 2? You can trades on $1,000 same time frame?
Yeah, you can. Okay. And so what I would do for that is, let's say that I've seen this happen. You get like a pattern, an M pattern that's verifiable to be a good trade. So you want to sell, and then the market will come back, and then it'll come back and maybe give you a better entry point. Like it'll go back against you, and then it'll close again and give you another leg to enter on. So that might be a better entry point, and it actually confirms your trade because it went back and closed down again. So now you're taking 2 trades on the 15-minute, you're doubling up on that same idea, and you're actually getting it at a better price point. So yeah, so you can take multiples on the same time frame. As long as the technicals tell you the patterns and everything technically is lined up, there's no reason that you can't take more than one trade on the same time frame. Did you have a last question?
That was it.
That was it? Okay.
Yeah, right.
That's a great one.
I'm trying not to forget it.
No, that's good, man. That's good. So we got it recorded, so we're going to go to the YouTube channel when we get this cleaned up, and we can run it as many times as we want. Go ahead,
I'm going to
Eric.
start that practice program because see, when you see me something, I know I need to do it right then because any grace period can change the market. That's why I said, Louis, you got all that practice set up, you should be going. See, if I had it all set up, I'll be click.
Going right with it.
You talking about, you bet, what you say you bet on practice? $50?
Oh, I don't know.
I said, Louis, you got $100,000.
That was on the.
Oh yeah,
It's
put some real money right here. Go hard.
Go hard.
Okay. You said you bet $50 on a $100,000 account.
Time flies. It's already 1 o'clock.
Oh wow,
you're
is it
busy,
one?
man.
I got to roll then, man. I got to get out of here.
I already know
Man,
you're
it's been
busy,
awesome,
man. That's why I hate that I had to change.
No,
time.
brother, it was perfect. You know what? This actually worked out for me. I got to take my wife to breakfast this morning, what she wanted to do, and that gives me more time. You know what I'm saying? So yeah, show a little. That's right. Show a little love at home, and it goes a lot further. So
I learned
thank
a
you,
lot
love.
today. I'm glad that you came in.
God bless you, brother. Thank you for.
Threw everything off today.
No, you didn't, because everything's perfect. Everything happens the way it's supposed to. I'm just grateful for giving us a platform to share with other people. So this is good stuff. We're gonna keep this thing going. We're gonna expand this. And we're gonna have a lot of fun with it.
So we're gonna be looking for you.
Already, you're gonna join us.
We're gonna have
You're gonna pretty much join.
That's good. So we'll talk some more. This is Kevin Jefferson, father of the Forex fam, and followmytrades.com with another edition of Barbershop Forex, where we teach you how to trade Forex so you can make enough money to afford the gift of freedom. That's what we do this for. We want to get you free financially, we get you free in a lot of other areas of your life. Join us at fmtrades.com. Become a member of the Forex fam. Lifetime membership. You get the online course and the live boot camps that I teach. You get access to my calendar where you can press a button and get on my calendar for one-on-one mentoring sessions. You get free trades sent to you so you can make money while you're learning and earning. You got a Facebook group with other traders who are only Forex family traders, so you have the same information. And we're here to win. So, and then anything that I roll out with, because I have other courses on decision making, mindset, manifestation. I'm going to have a teenage Forex class coming out for teenagers. All of that stuff as a lifetime member, you get that at that one cost, and you never have to pay for it again. So consider becoming a lifetime member. It's the best value, but nevertheless, just take action. That's the most important thing. Make a decision, take action. That's where wealth resides. So this is Kevin Jefferson signing off. Happy trading.
So yeah, Kevin, like when you be prepping in the morning time, like you said, you start your day at 4.